The key is invest versus I'm going to put the money under the mattress. I'm going to put the money in the bank. I'm going to put the money in a certificate of deposit. I mean, real investing. Now, for me, it's cash flow investing and passive income investing. That's made the biggest impact in my life.
Welcome to The Conscious Investor. Let's get started. Conscious Investor, welcome back. Remember that you could do all the greatest investing in the world, but if you don't have someone who is advocating for you on the tax end of things, you are just like a bleeding artery. You are losing a lot of money, probably paying unnecessary taxes and such. So please make sure that you are partnered with a CPA and a firm that is postured to really in position to support you in your investment goals through tax strategy. That means we're not knee-jerk reacting at the end of the year, April 15th or October 15th, whatever your deadlines are, right? You're not freaking out. You already have a plan in place, maybe even met in November, and then you're setting up a plan for 2023 or whatever year, and then you're putting that in place. You're just reporting at the end of the year. So if you need support with that, please check out Mode Wealth. They can support you with that. They are phenomenal and have done wonders for my family, and I'm confident that they can support yours. So now that I've shared that with you, but seriously, please don't pay more in taxes. Your money can go and stimulate the economy in powerful ways while supporting your own family. So please make sure that you are not doing that. No overpaying. By the way, I did overpay for years and I learned the hard way. That's probably why I'm so passionate about it. But today we have a really, really amazing guest on. You know that I love bringing people on that are going to support you in reaching and exceeding your goals, because you know what? You like to exceed things. You don't like to just settle for nothing or something. And that's why you're listening to the show. So today we were bringing Travis on, and Travis is just absolutely a rock star at, he is a passive investor, a very accomplished passive investor. And he happens to work for one of my favorite companies, Ashcroft Capital. And so I just want to say thank you so much for joining me today, Travis.
Julie, thanks so much for the invite. And I do want to say this before we get rocking and rolling. Sure. On your sponsor and to the point of a CPA being proactive. Couldn't agree more. I learned that lesson a long time ago working overseas in oil and gas, and nobody specialized in that kind of thing. And my CPA is telling me to pay all the regular taxes, pay federal, pay state, et cetera. I didn't know huge exemptions even existed. So I switched firms to some group that specialized in overseas oil and gas, and literally got like 35 grand back in my pocket just in 1 year. And then here recently working with a proactive group like your sponsor, literally a tweak of the tax return that would have otherwise been missed, reduced my taxable income by almost 20 grand. And again, we're just talking about single years when I use those examples. So it's invaluable. I used to cheap out and say, who's the cheapest CPA I can use? You know, they're 1,000, they're 800. I'm going to go over here. And I lost tens of thousands like you for years and years. So anyway, short little side note, but thanks for having me on the show.
I'm glad that we can, no, that's a great side note. And I'm glad that we can commiserate together. I think the biggest moment for us was when our just regular CPA, a generalist, right? And so let's just talk about this for just a brief moment. Because it's a hot mess for a lot of people, and taxes are going to go up. You and I know taxes are on sale even right now. They're only going to increase with all the money printing. And so having a really powerful tax strategies is going to be how you are going to be able to really snowball your wealth building. But when we paid $40,000 one year, it was just nauseating, and I didn't like that. And it was like, how do we not do this again? How do we not repeat? So you have a generalist, just like you in the physician's world, right? Doctors, you have a general, you'll go see your GP. Great. You want a specialist.
Yep, exactly. Exactly. I mean, that's how it always ends up anyway, in my case, right? You go to the generalist and they don't really do anything. They're like, well, we got all these options over here. I don't do any of that.
Yeah. So. Yeah. I like to skip those people. My husband recently tore his distal bicep tendon and we skipped the GP. We just went straight to the ortho. We're like, we know, like, let's just go. So, well, I like that this is actually really important information for you, conscious investor. So definitely not a waste of time at all. But you know what, Travis, you have such a wealth of knowledge and you have such a great way of supporting and educating people in growing their passive income because it changes life. Let's dive in. Let's talk about it.
Yeah, this started for me at an early age, not the investing side, but the basically going out there and experimenting with a multitude of things. And then when I would have results, doing something about that to get the information out. I wrote a book my senior year of high school called How to Get a 4.0 GPA with Minimal Effort. Terrible title. But
my son might like that next year.
There you go. But I wrote that book genuinely just to help others. That wasn't a for-profit thing. That wasn't a school project I had to do. It was just a book I wanted to help other people I saw struggling because I had found some systems that I put into play that I thought made things way easier. So anyway, that's kind of where the journey starts. And my upbringing was from two frugal parents. My parents split when I was 5. And so, but each of them were very frugal minded. So these were people of, use the coupons and buy the off brand and don't overspend, don't buy things you don't need, et cetera, et cetera. So I was raised with that kind of mentality. And I instilled that for many, many years until I realized as an adult that even if I had, let's say a decent paying job, let's call it $10,000 a month in income. Well, I can't avoid taxes, so I'm paying a large portion there. I still have to have a place to live, whether I own or rent. There's money that goes out the door to that. And I still have to pay for insurance and transportation and, food. And so even if I'm very, very frugal, I'm the best of the best, I'm still only able to save a few thousand per month at best. And that means not increasing my lifestyle. That means not having kids and a family. That means not taking worldwide trips or extravagant vacations. That's just penny pinching till the day I die.
Or vacations in general that are not road trips and camping trips. Like, right.
We did a fair bit of camping growing up. That's for sure. And I love camping, and that's fine. If that's your thing, you do you. But I guess my epiphany was, what if I turn that equation around and instead of saying how much money can I save every month, it's how much can I multiply or earn? And so this kind of turned me on to this concept of investing and then realizing there isn't a cap. Your money can just compound and compound and compound, and the world is your oyster, And then I got to thinking about something I call lifestyle design. And I started investing later, I'm fast forwarding a few years, into passive income investments. And then using that passive income every month as it grows and multiplies to expand my lifestyle, to take extra vacations, not try to cut back on vacations, right? To buy healthier food, not to try to buy the dollar menu at the fast food place, And so it really made a huge impact and has helped my wife and I expand into more and more things that we want to get involved with is what it comes down to. So some people use the term financial independence, financial freedom. I like the term time freedom because for me, there was a day in my life, well, more than a day, so several years, where I had no time. I was working in oil and gas. I was working 100-hour work weeks. I was flipping homes on the side of that. I couldn't date. I couldn't travel. I couldn't do anything. I couldn't live. I lived to work. And the passive income, when I really bought into that message, that concept, that strategy, I was able to leave that environment. I was able to pursue, frankly, whatever I wanted to pursue at that point, because I had enough passive income to cover my lifestyle expenses. So it led to working with a Wall Street brokerage firm. I did that for a while. I wanted to learn stocks, bonds, mutual funds, see how that stacked up compared to real estate. And then it led to working with Ashcroft Capital and Joe Fairless and being a director of education, which is what I am today. So I'm an outreach and a source and a mentor for free for people who want to learn about multifamily investing, real estate private placements, how to effectively diversify and build income streams. And again, to either live on those to expand your lifestyle or to be able to actually retire, like I was able to help my dad do from 30 plus years at the post office, when he's looking at alternatives that are yielding 2% a year and, money in the bank and bonds and CDs and annuities. Nothing made sense until we started to unravel the possibilities that exist in real estate.
Gosh, okay. Shout out again. I already said this before, at the very beginning, I said Ashcroft Capital, one of my favorite companies out there. And so, but this is one of those reasons why. So there are different things that differentiate different companies that you can invest through. But, just the fact that Joe walks with a significant level of grace and humility, and he literally creates the best ever show and the best ever events and everything. And then, he, hires someone of your caliber and expertise to be able to, let's just support people. It speaks to a true nature, a true heart that is at the beat of Ashcroft. And that's one of the reasons that I just have so much respect and just love it. So, wow. And how did you get your dad? Second question, before you continue on, it's amazing and wonderful that your dad was willing to listen to you. Oftentimes, there's a discrepancy there that can't be reconciled, to put it nicely, sure. Right? So, why do you think your dad chose to listen to you? Because it literally did change his life.
Yeah, I think we've helped each other throughout the years in different ways. So in some regard, he got me to eyeball real estate in the first place. So he had some local single family homes. This was, 2009, 10, 11. And that's when I coincidentally started buying up real estate too. So he was kind of my mentor for a while, right? And then it turned into, I just never stopped learning and going and grinding, right? Every day I'm researching, I'm learning, I'm networking, I'm doing events, I'm listening to podcasts. I started to quickly excel more than what he was going to put into that. And so then it kind of flip-flopped and I became his mentor in real estate when I started doing syndications and passive investing. Because what happened in his story is what happened also in my own. When you get to the 6th and the 7th and the 8th single family home, it starts to turn into a bit of a job and it starts to pull a lot of your time away. And for my dad, he's over 70 years old. He doesn't want to be active like that. He doesn't want a job anymore. That's not the point for him of retirement. So this was the value that could be had for him, as he could keep his single family homes to a point that he wanted to manage, but then he could lever up his passive income through syndications and private placements without requiring extra time and effort. So, being a postal worker, he had a TSP plan. It's a thrift savings plan, and that's much like a 401k. So you're limited to these like 5 options, and it's like stocks, bonds, or 0% yield crap. And so we're looking at that, and we're looking at his IRAs, and we're looking at money in the bank. And if you're not tuned into the world of real estate, it can be daunting to think, boy, if I don't have $5 million to put to work, I'm not going to have a comfortable retirement, but to know that there are things that exist. For example, I'll run some quick numbers for your listeners. So in 2015, that's when I made the leap from single family to multifamily and from active into passive. Okay. At the time, it wasn't uncommon for a deal that I would consider a conservative to have an 8% annualized cash flow coming from it and then moving up over the years. So I said, okay, if I go liquid, if I sell all my investments, I pay all the tax, blah, blah, blah. And then, what is my net worth? What am I sitting here? What can I use to go invest in these syndications? Well, here's the numbers. If you need $100,000 per year to live on, for example purposes, and you put 1.25 million to work at 8% a year passive income or cash flow or yield, that gives you $100,000 per year. If you wanted to play the ultra conservative game and do like US Treasury bonds at 4% or something like that, you would need 2.5 million, so it is a capital intensive play, but it's time or money, right? It's either you have the time to dedicate towards your investing or you have the money, so I built it up to a point where I finally had the money to go play. And that's why I started active in the first place because I didn't have the money and I needed to build that up. And I'm happy to go more into that strategy and what exactly I did. But yeah, that was kind of the big picture outlook is shifting his mindset from these annuities and whole life policies and all these things I'm being sold are only going to yield me 2-3%. I don't know how I'm going to do this to wait a second. I could do 8, 9, and 10% plays over here. Wow. I just got there 4 times faster. And so that was the light bulb moment.
Oh, it's so great that you guys have that type of relationship and that you're able to articulate that also and have the tangible, here you go, here's the path. Because people do need that. Absolutely. So I have to ask, since you have a background in Wall Street and it's eating at me and I follow curiosity, and I'm sure the listeners are like, Julie, he was mentioned stocks because I believe in having a balanced portfolio and I'm not anti anything. But, when you look at, you were just talking about the difference between bonds. I was just writing up some content yesterday on 401ks, like, like you can only put $20,000 in there to begin with, like 20,500. Like, it's just like, how can you actually retire? And what does retirement actually look like? This is what blows my mind. Just is like, do I want to retire and be, the coupon queen? Or do I want to retire and continue my lifestyle, or even I want to level up my lifestyle when I retire. I don't want to have to digress. And I don't want inflation, because inflation will happen. Medical costs will rise and all of that. I don't want those to inhibit my lifestyle. So, when you're looking at the lay of the land and all the different assets, and you're comparing stocks with real estate assets, what do you see?
It's a great question. And I'm like you. The whole reason I made that pivot in the first place was I didn't need a job for the income. I wanted the experience because I didn't want to be the guy saying real estate's the only thing in town. It's the only game to play. There's nothing else for you. I wanted to be more balanced and say, well, in fairness, there's these other products that may be better. So wasn't trying to be like a financial advisor. I just wanted my own knowledge. So here's the thing about the stock market. It's wildly in your favor or against you, So a lot of years looking back over the past decade, the stock market was, in my opinion, way too overheated and hot. In other words, if you were to buy private real estate versus buying, a REIT, a real estate investment trust that owned the same kind of real estate, you were paying like a 20-30% premium by buying that through the stock market, and then in addition, your cash flow yields could be 2 and 3% a year compared to like 6, 7, 8 in the private space. So in that situation, it didn't make a lot of sense. Now, when does it make sense? Well, if you look right now, there's some REITs, not all of them, that have been really beaten down just because the markets are down this year. When the S&P, the Dow, and the NASDAQ are all crushed, there's a good chance that REITs are going to get dragged down with them. So there was a time in March of 2020, for example, there's one REIT I always invest in that I love. I'm not going to name it though for security reasons, but it was beat down almost 40% in a matter of a month. And so what happened is the yield went from like 6% annualized to like almost 13%. It was like 12.5% because they didn't change their dividend, but now it was a 40% discount to get into the stock, So that became an opportunistic play, and in that moment, that beat a lot of the syndication yields that I was getting in the private space. So you just have to, I can't time markets, I can't predict things, but when I open my brokerage account and I see something like that, you have to be opportunistic and say, well, that actually does make sense right now. But you also have to be okay with volatility. If I bought in March of 2020, let's say the market had kept going down another 30%, I just would have lost a lot of money. And then I wouldn't have been able to get out of that deal. I mean, I could have at a loss. I wouldn't have wanted to, right? So that's kind of how I look at it. The reason I've got 80% of my portfolio in private placements in apartment syndications is because they are more stable, predictable, and consistent. And as someone who lives on monthly passive income, that to me is very important. I don't want, distributions being stopped and cut and, dividends going away and 30% up this year and 50% down next year. I don't like the volatility, but that's just me.
Yeah, that would be no different than your employer, conscious investor. If your employer every single month or 6 months or year was just saying, oh, you know what, your income just shifted. Your income every month. Oh, something's new. This shifted, sorry. Yeah, that would not be a nice way to live life at all. So how did you end up snowballing? The conscious investor is listening. And I mean, he's at this point where he has some discretionary cash and he needs to place it. He's just trying to figure out, where do I place this so that I can benefit my family?
Yeah, it's a great question. So these were the steps that I took to reach the financial independence, if that's what you will call it, or time freedom. So I'm an advocate for the goal being do what you love and enjoy. Make that the goal. It doesn't mean you're going to be able to do that on day one, right? As soon as you graduate college, you're in your dream career, making great money, but get towards that goal, right? So here's my 4 steps if anyone wants to write these down. Number 1 is earn as much as you can earn using your highest and best earning potential. So I mentioned in my story, not that I recommend this particular exact path, but I did oil and gas work because I got 60 hours a week overtime, 40 hours straight time. I got well site bonuses. I got tax-free per diems. I got hazard pay working overseas. So you add all this stuff up and it was good pay, but I didn't stop there. I said, what else can I do to keep making more money? And again, keeping in mind, this is just for a period of time. I'm not saying do this till you're 90 years old. I'm saying do this till you reach financial independence or close to it. So I flipped homes. I had vacation rentals. I had roommates. Anything I could stack on to push a little more income in the door, I did that. And so for me, this was all about maybe a 5 to 7 year process, but it could be different for you depending on how aggressive you want to be. And depending on, are you already a doctor, dentist, lawyer, attorney, professional athlete, or are you a minimum wage worker at Starbucks? I don't know. So you got to look at your scenario and think, how do I maximize my time and my value? Number 2 is live on as little as possible for a period of time. Again, I'm not this, like you alluded to earlier, do I want to be the coupon queen throughout my retirement? Well, that's not to me the goal. Yeah, I don't want to just, be cheap or frugal until the day I die and miss out on perhaps the only shot we have at life, for all I know. So again, 5-7 years, make a little sacrifice. And then number 3 is invest the difference between what you're earning and living on in something. Like the key is invest versus I'm going to put the money under the mattress. I'm going to put the money in the bank. I'm going to put the money in a certificate of deposit. I mean, real investing. Now, for me, it's cash flow investing and passive income investing. That's made the biggest impact in my life, literally life-changing. But you do you. If you want to go, trade stocks or something, you do your thing. And then number 4 is getting rid of high interest rate debt and not getting into any debt if you're not in it currently. So a credit card debt where you're paying 20% a year, you got to get rid of that stuff and keep it down, keep it low, and keep it away. Now, if you have really low debt, like you have student loan debt at 3% or a car loan at 3%, you might still prioritize investing over paying off a 3% loan, for example. Again, not giving financial advice or telling you what to do, just something to consider. If I can invest and make 10% over here, I'm certainly not going to pay off a 3% loan over here, right? I'm going to go with the opportunity, but the 20% may be a good deal. So, and back to our tax strategist conversation, if I can reduce my tax bill by 20% by paying $4,000 for a specialist, that's a good return on investment, So I want to look at always where's the highest yield and where's the opportunity. So, so those are the 4 steps. Simple, but not easy. But I believe a lot of people can do this. It does take some self-discipline and a little motivation and a little clarity. You need to, like we all talk about, write down your goals, figure out your why, get a little philosophical, but it matters and it's important. And so that's what I did.
I love those steps. And I like that you started, I'm looking over at my bookshelf because I am an avid reader, and you may have read Peter Drucker's little pamphlet, basically.
Knowing oneself.
Managing oneself. Yeah.
Managing oneself. Yeah, there you go. It's been a long time. I did read it. It was probably in 2015, but yeah, I did read that.
Yeah, it's so wonderful. And he and Michael Neal with Super Coach and a few other authors are very much advocates. And we're told this concept of like, chase after what you love, do more of what you love. And I just thought it was a bunch of BS fluff. And over the last few years, I've literally been intentionally pursuing, what do I love? What's my purpose? How do I want to contribute in the world? And it's just life flourishes when we do that. It's not what society will tell you. And even the steps that you've provided here are very counter Dave Ramsey-esque in a sense, man, Dave Ramsey is great. There are a lot of people that need those strategies and things like that. If you're looking at investing, then you're going to be looking at things in a different perspective. If you want to do a wealth snowball, it is a different perspective. So I appreciate you even mentioning like, hey, maybe that student loan debt at 3% is actually not bad, like maybe that's not the priority. Maybe this is the priority. It's really important. And so understanding and knowing like, why am I doing this? And what makes sense here and what's the best play? I don't know that a lot of people take the time to actually calculate and think it through versus I'm just going to follow the guru and do this. And it could be a lot of different gurus. I'm not picking on Dave today. I have picked on him in the past. Let's,
from a high level, let's talk about just a few, because you're exactly right. It's like financial products. Does an annuity serve a particular demographic for particular reasons? It does. Is it appropriate for me? No, it's not. And so that doesn't make it a bad product. That just makes it a product that, doesn't make sense for me. So to your point, so like you've got the Susie Ormans, which are, if you're out of control on spending, if you're in heavy credit card debt, if you just can't manage finances at all, you're out of control, she gets you back to kind of zero, right? Cut the credit cards up, get out of debt, get to neutral. Dave Ramsey takes it from that neutral to like pay cash for everything, pay off your home, live the comfortable middle-class lifestyle. That's cool. Maybe some mutual funds on the side. And then you've got like the Robert Kiyosaki's talking about infinite returns and multifamily real estate and oil and gas and taxes. And, he's kind of the investor in the next level. So again, it's not appropriate that everyone listen to Kiyosaki on day one, or that, you have 100,000 in credit card debts and you're going to go buy multifamily apartments. That doesn't make sense, So you do have to, and I love this quote by Marcus Aurelius. He was one of the Roman emperors almost 2,000 years ago. He says, everything we hear is an opinion, like we're talking right now, or these gurus are speaking, not a fact. Okay. And then everything we see is a perspective and not the truth. So we're just up here, talking about our opinions and our perspectives, and it doesn't make them right or wrong. It's just, I'm sharing a path that isn't widely marketed or spoken about, in hopes that a few people really resonate and say, man, I've never thought about that. And that's something I want to look into and start that journey. Okay.
Well, as soon as you mentioned Marcus Aurelius, I mean, I've Divin, I am not speaking correctly. I've been sick for a couple of days. And so I'm like, let me come out of it. Come on, girl. But anyhow, I've been nerding out on a lot of Stoicism over the last couple of years. And it's so practical and it's so simple. And it just is such a breath of fresh air in the clutter of the world. So thank you for bringing that into the scene.
Yeah, I think it's more relevant today than ever before. Not saying it wasn't relevant back then, but there's so much noise, and it's just Stoicism 101 is just, what is in your control and what is not, and so we've got so many people tied up in scary news headlines and politics and all this stuff that largely is not in our control, or, flooding and hurricanes and all this kind of stuff. So it's honing it in and it's simplifying your life, and it's saying, how do I be a better person? How can I contribute? And how can I take these stressors and just, eliminate the nonsense and focus on what matters, myself and my family and society in the ways that I can actually make a difference. So yeah, anyway, for anyone not too familiar, Ryan Holiday's done a great job at writing books on Stoicism and making them very, common sense for the modern day person. A lot of YouTube and books and audiobooks. So anyway, little shout out to Ryan.
A super shout out to Ryan. My book club that I facilitate, we've read a couple of his books. And so I am going to give a book recommendation if you're feeling overwhelmed by the noise in the world. I would recommend any of his books, but everyone loves The Obstacle is the Way. It's a great gateway into all of Ryan Holiday's, but Stillness is a Key, Courage is Calling. But what's really nice is that I have a very strong faith. And so I always think of them almost like a devotional, the way they're set up. It's really funny. I'm like, oh, wow, this is similar to devotionals in the church. But you have like a really nice historical story that is very relatable from people across the continuum of history. And then, you're just diving into these different concepts through different historical events. Very palpable, 2-3 pages. And the books are like, what? I don't know. They're like a 5x7, maybe. I mean, so we're not 2-3 pages of something that's not very big. So, and it's not teeny tiny print. So I'm just saying everybody can digest this. And if you just read 1 or 2 of those a day, it's like the best dose of fuel that you can give yourself.
Yep. 100%.
Love it. Absolutely love it. So, well, I love this. I love this information. I always try to just think, what is a conscious investor thinking and asking? They're loving this information and loving your 4 steps and everything. And everybody has their own caveat. And now we have this investor that's saying, okay, I feel like I've educated myself. I feel like I have this discretionary cash.
Yeah.
But now, man, Travis, how do I choose?
Yeah.
How do I choose where to deploy this? Because there is that nervousness. You and I know this. There's always that nervousness, that hesitation of oh, okay, I've worked very diligently to cultivate and build this. Yeah. And now how do I choose?
So there's 2 things I want to touch on with that. It's yes, we all get there to that point. So I'm an advocate for starting at your own goals first. What is it that you're trying to accomplish? Forget about investing in money and all this stuff. What are you trying to do? So you've got Susie over here that says, I need 10,000 a month passive income for whatever reason that she has. And you have John over here that says, I need 5 million net worth by the time I retire at 65. Those are vastly different goals. And they need to have more than just the numbers behind those, of course. Like what's the reason he needs 5? What's the reason she needs 10? So start with things like this and really figure out your whys. Then figure out what kind of investment vehicle would be appropriate to get you there. So for example, John might invest in a new development multifamily deal that doesn't have any cash flow because he's going to use a self-directed IRA and he doesn't need the money until he's 65. And right now he's 45, right? So that could be appropriate, but it's not appropriate for Susie because she's trying to build 10,000 a month passive income. What good is it to go invest in something that has no cash flow for the next 5 years? That doesn't help her at all. So that's not an appropriate investment. So you have to start with your goals first, then figure out what's going to help get you there. And then let's talk about barriers of entry, because a lot of people think, oh, multifamily private placements, I need 50K or 100,000 to get started. That's too much. I'm not comfortable with that. You can start as a passive investor with $10. Literally, you can open a brokerage account. You can find a publicly traded REIT that distributes monthly distributions. You can buy 1 share for free these days. You don't even get charged for a fee anymore for trading. And then there you go. You're a passive investor. You're not materially in the business of that REIT. They're out there buying up real estate, managing it, doing their thing. You're a passive investor, just getting a monthly distribution. So, literally for $10, you can get started. In terms of active investing, if you say, I want to do it myself, but I'm scared. Well, I started with house hacking, meaning that I was already living in a home and I rented a spare bedroom out. I got $600 a month. That was over, almost 15 years ago. But, I don't know what you could charge. I've also bought, we used to own an old 1932 Tudor home in Denver, and it had a separate outdoor entrance and the basement was like its own unit. So it's kind of like a duplex stacked on top of each other. And we Airbnb'd it. We did, VRBO on that. We rented to traveling nurses on short-term leases. it was a beautiful experiment that was really no risk because we were living in the home anyway. Even if it wasn't rented, I could afford the housing payment. You know what I mean? So you can start with these small baby steps and build onto them, or you can just say, hey, I'm going to go put 100K into a private placement. And you can do that too. So it depends on you and your risk tolerance. And so Peter Drucker and, managing oneself, just knowing yourself goes a really long way. So you might want to start with one of those books if you don't know those answers.
That's good. And by the way, that book, I've mentioned it so many times. I mean, it's an hour-long read. It's a pamphlet. It's something that he wrote for the Harvard Press, and they ended up putting it into this little tiny pamphlet. So it's not this big, cumbersome book. I know that oftentimes there's a hesitation with, do I want to stop my life to read something? Or is this, I'm sure you can get it on audio and everything, but it's absolutely 1,000,000% worth your while. I think I probably marked that book up more than anything else. Poor book. Now, I do have this one perspective. And so I'm going to we'll do this quick little, as we're wrapping up, I just want to say, part of me says, one of my values is, how do I want to live my life? And I want to live that life right now, like day to day. So sometimes I want to my husband and I will look at each other and we'll say, wait a second. He puts me in check more than anything. He's like, did you want to give yourself a job? Did you want it? Like, is that what you want to do? Did you want to give yourself an extra job, more work? And I'm like, no, thank you. But it's such a good idea, And so sometimes, and that's part of knowing yourself. And especially if you're in a marriage or a partnership, like supporting each other in that, to say, okay, but we're trying, and he'll remind me the goal is, and he'll remind me of what our goal is. I mean, our goal is to be where you guys are at, Travis, like just fully passive income lifestyle. And so, like knowing what the goal is and maybe taking some of those steps. For us, it's taking a step to actually hedge in and make sure, protect ourselves from, actually, let me rephrase that, because I do like to always spin into the positive, but creating the habits that will, when we are fully passive, it's not going to be this crazy transition. Like, oh my gosh, we just won the lottery basically. And now what do we do? It's like, creating that mindset in advance. Yeah.
So system wise, a couple things we've done. I like to keep my accounts as low as possible. So like I have a place for every dollar that comes in, whether it's through my passive income account or my active income account. Money doesn't just hang out in there, right? I'm not just sitting on, oh, here's 100K. Now it's 120. Now what am I going to do with this money? It has a purpose. Always. And so again, it takes a little proactive strategy and planning up front. But in this modern day, you can't always do a private placement this way. But in terms of, we were talking about a brokerage account, you can ACH link your bank account to your Fidelity or your Schwab or your TD Ameritrade or whatever, to where automatically it's pulling the money out, or you can just click a button and pull the money in. And then you can either have it auto invest or, whatever you want to do. And what's cool about, I'll give another prop to the stock market, as much as I'm not a huge fan, but one of the benefits is that it is liquid. So if I've got a brokerage account with 300,000 and all of a sudden this great multifamily private placement comes across my table, I can sell 50,000 of stock, transfer it into my bank, and go do that deal. And you can't do that in the reverse situation with the private placement. I can't just go pull my 50K out and go buy some stocks with it. So it does take some strategy. I don't want to turn anybody off that's listening to think, wow, this is going to take me 10 plus years to learn this kind of stuff. Most people that do what I do, meaning that they're a limited partner in private placements, are not even real estate people. They're not even investors as far as like a professional level investor. They're people saying, I'm a doctor, I make 200, 300, 400K a year, whatever. I don't want that all in the stock market. I'm not comfortable with the volatility and the BS. And so I want to put some of that into real estate. At the same time, I don't want to go do that real estate. I don't want to be a landlord. I don't want to flip houses on my weekends. I just want the diversification. So again, you could just look at this as an idea of something where you could just take a portfolio of $1 million and put 100K over here and try something new that's a little more, a little less volatile, a little more consistent and predictable. So yes, it does take Self-Discipline. That's another Ryan Holiday book that just came out. I think Discipline is Destiny or something. He just released that book. So, maybe it does start with a book. And then from there, it starts with writing down your goals and criteria. And then it starts with investing. So you don't have to jump in, but if you're not going to be investing right now, at least be learning and preparing for what you're going to be doing.
I love it. I like that is also like such a bow on top of this entire conversation. So we're going to just accept the bow, and it's just beautiful. Travis, thank you so much. Thank you so much for joining us. Thanks to you for this invigorating conversation, and a fellow Ryan Holiday fan is like just a delight. So that was just icing on the cake right there. So it was unexpected and absolutely like such a delight. So thank you so much for your time. What is the best way? Where would you like to send people?
Sure. So I encourage people to reach out on your terms and in your own way. I'm on Instagram and Facebook at Passive Investor Tips. I'm on Bigger Pockets. I'm on pretty much any social media, Travis Watts, WATTS. And if you want to get on my calendar, you can go to ashcroftcapital.com/Travis. And I give away free 15-minute blocks of my time with no sales pitch. Any questions you have about anything that we've talked about or didn't talk about here, happy to do that. That's another way to get connected.
Love it. Thank you so much. Conscious Investor, thank you for joining me. I know that this has been an invaluable just resource for you. And you know what I know is that you have a heart of gold also, and that you will want to share this. So please make sure that whoever was coming top to mind, that you just take that moment. It just takes a single moment to hit that little share button and send it off to somebody. So please make sure that you take that moment and trust that intuition, because every time I've done that, the person has always been like, oh my gosh, I needed that. So I have no doubt that you will have the same response as well. Remember also, please, that adventure belongs on the trail, definitely not in your investing and definitely not in your personal life. So please make sure that if you have questions about investing, you're curious, you're like, okay, that was a great conversation, Julie, let's talk. Remember, we need to have this conversation. And, at Three Keys, we like to make sure that we have, investors that we actually know and understand what their goals are. So make sure that you reach out so we can have that conversation, because actually maybe we're not the best fit for you. Maybe we're going to send you off to Ashcroft or to one of our other trusted, other syndication companies that we know, like, and trust. Also, if you are on that personal development side and you're thinking, I feel stuck, please make sure you schedule a call so that we can talk about, what does coaching look like? How can we support you in that capacity? As always, live big, love bigger. Overwhelmed by apartment syndication but want to learn more? Let me help you press the easy button. Head over to 3keysinvestments.com and download Syndication Made Simple. I explain simply how the process works, who's involved, and how you can get started today. You're smart, and with this simple guide, you'll be able to understand the process. Head over to 3keysinvestments.com and download Syndication Made Simple.